Welcome to our lecture on IFRS 3. Before we look at our IFRS 3 notes, I just quickly want to revise a few important principles. The first principle, if we look at a transaction where we have our parent, we've determined that there is control in terms of IFRS 10, and this is now a subsidiary, and this will be a set of group financials, and we need to consolidate. Please remember, if we refer to the separate financial statements of the parent, this will be the separate set of annual financial statements, which will include our statement of financial position, our profit and loss, statement of changes in equity, and so forth. Remember, our parent will have its accounting policies. For example, when the parent purchases shares in a subsidiary, that this will be, in terms of IAS 27 paragraph 10, accounted for at cost. And when we look at the separate financial statements of a subsidiary, this will include the statement of financial position, the profit and loss, and so forth of the subsidiary. And the subsidiary can have its own accounting policies as well. Now, why will this be important to us? Remember, when there's an intra-group transaction, we will have to eliminate the intra-group transaction. Therefore, if we, for example, look at, let's say, a building. In the accounting policies, the building can be accounted at revaluation model. But in the accounting policy of a subsidiary, this can be accounted for in terms of our cost model. Therefore, you always need to read the accounting policies and identify if there is any differences. Right. Then, important, number 2. Remember the difference between initial and subsequent. Initial will be on the date when they enter into that transaction. Subsequent will be the following year end. Therefore, for example, if they enter into the transaction on 1 April, and the year end is 31 December. Our subsequent will be 31 December. Then if we look at recognition, recognition will be when we meet the conceptual framework principles and they may recognize an asset or a liability. Normally recognition will not differ when we look at subsequent. The important section here will be measurement. The amount. How did they calculate the amount? And the principles may differ for initial versus subsequent. Let's see if you know these principles. Right, now this is me. Hi Bianca. And I'm sitting at my desk and I have a mirror close by. So after I've watched the revision section briefly where we revised our basic principles, I got up and I explained to myself these principles in a mirror. Now, I want you to please get a mirror where you are able to talk to yourself. After we work through important principles that you need to know and understand, get up, explain these principles to yourself, or maybe to your dog. No, not your dog. Your dog's going to run away. Maybe a cat. Just explain these principles. Talk out loud. If you are able to explain the principles to someone else or to yourself, you know that you understand the principles. Right. Now, let's get back to our notes. This is your IFRS 3 lecture notes. I've divided this lecture into 2 sections. On the left side, the acquisition of a business. First, we are going to work through IFRS 3 paragraph 3. We're going to move on to the definition in terms of Appendix A. We're going to look at the application guideline. I'm going to work through the flowchart with you, and then there is illustrative examples available for you to work through. Then, once you have determined that the acquisition is a business, we may apply the acquisition method in terms of IFRS 3.